Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Shankara Buildpro, one of the marquee stocks of 2017 and when the IPO came out. But now the stock is dwindling down below 300. And let's understand what has gone wrong with the stock and what needs to be done. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now about Shankara Buildpro Limited. It was established in 1997 and they provide tile and specialty building materials. So they provide cement tiles or white cement materials plus other ceramic products, etc. Many different products that come into decoration and building materials for houses. And due to the clear impact of what happened with the housing crisis and the real estate crisis post the GST and RERA law and so on and so forth, 2018 and 19 have been a complete washout for all these companies, be it Shankara Buildpro, be it Kajaria, Sera, HSIL, etc. Things have really gone pear-shaped for these companies. They also provide roof sheets, steel pipes, and tubes. So, again, these are all related to infrastructure and construction. And if the construction activities keep dwindling down, then the company would not be getting the number of orders as they were getting earlier. They had a stellar IPO, and the IPO was listed with a 50-60% premium to its price, and they serve leading clients in the office division, the corporate division. So it's not that they are only a retail oriented company. They have leading clients, and their business is spread all across India. If you look at the financials, the sales were, you would say, down a little bit by 10 crores, but the PAT was up by around about 11%. The debt has reduced year on year, which is a very good sign. But if you look at the margins have been low. I mean, these kind of margins are being seen in good quality textile companies or real estate companies rather than some consumer companies. So the margins are around 5% to 7%. So 4 to 7% are the margins, whether it's return on equity or operating profit or net profit margins and so on so forth. If you look at the stock performance, then as I mentioned, they had an exceptional growth in FY18. So 2017 was a remarkable year for Shankara Buildpro, and probably the stock was trading at 1200, 1300 at that point of time. Now the stock is trading at 300 rupees. The IPO was outstanding, and everybody thought that the business had great potential because this was a more or less a very low debt, you can say, construction ancillary company which had a widespread in South India and also had spread its wing in North India, and currently serving major clients. So everybody thought that it will grow at 35% sales growth over the next 3-4 years, and that's why the PE denoted to Shankara Buildpro was pretty big. But everything came a cropper in 2018 and 19, and we have seen the stock dwindle down from about, you would say, 12 1300 to now 300 levels. Numbers were not really great at that point of time. It was not great, and finally we see that the numbers have not come out to be really good, and eventually what we have seen during the slowdown is that profitability has slowed down to around 8 to 10% growth, which is merely an IT sector growth that we are talking about. But IT sector stocks are more safer than some stocks in the construction ancillary division. Plus, you have seen that the sales have gone into negative territory. I mean, it is not growing, but it is decelerating. So FY19 numbers have been disappointing, and the first 2 quarters of FY20 has not been different, and the numbers have not improved as yet. So, what have been the reasons for stock crash? The bad FY19, as I explained, and the current year of 20 FY20, the profits have declined, as I said, from 18.6 to 9 crores at the moment, and it had just about gone up by a smidgen. Borrowings has been at 337 crores versus 216 crores, although debt has reduced. But on a holistic basis, on long term basis, in the last 2 years, the long term borrowing has increased about 50% from 216 to 337 crores. Margins have really shrunk, as I said, now to 5.6%. There is low cash on books, and it was pretty high during the IPO, and the cost of borrowing has increased for the company where it was pretty less about 3 years back. Currently, the cost of borrowing is pretty high. So these are very important, you can say, numbers to look at rather than just the pure profit and loss and sales numbers. And if there is low cash on the books, and if the company goes into some kind of a trouble, then they would be not be able to repay the debt, whatever debt they are having, and that everybody needs to take into consideration while buying any stock. And probably that is why people are staying away from the company unless they come out with stellar sales and profitability numbers. Seldom would people get into such stocks. If you look at the technicals, it has already fallen 85% from the peak. As I mentioned, 12 1300 was the peak of the company. It is finding support around the 270 285 region for the time being. 330 is the strongest resistance has been 330. So probably any declines, as I mentioned just now, it has fallen below 270 275 levels. So probably around these levels one can look to buy, but you would need to have a long term view, a pretty long term view, and expect that the numbers continue to improve. Rather than doing that, you need to buy into companies which have been doing well. And in you can say building materials, I mean Asian Paints does well, and there are many other companies which are market leaders in their domain. Look for those companies which have a clear balance sheet and a good cash flow to get into, rather than getting into some companies which you would expect to do well. So you don't make money on hope. So that is the main point. The 200 DMA is at the 400 level, so it has really been, I mean, out of everybody's radar at the moment, because 400 is way too off at the moment. Always have a stop loss. I set a stop loss of 303 when I made this video, but the stock has fallen sharply even from those levels. So do not trade into the stock, and even the investment levels should be close to 300. So if the stock has gone to 240 250 levels, don't touch it at the moment. So what needs to be done? Be cautious with such stocks. As I said, don't touch it at the moment. When I made the video was made around 4 5 days back, and the stock was trading at around 270 to 80 levels. Between those levels, now it has fallen even further, and probably avoid these kind of stocks. Even do not buy with strict stop losses. Let numbers improve first of all. Even if you buy at 340 350, it's fine. You buy at around 30% upside from here, that is absolutely fine, unless the numbers come in. Because if the numbers doesn't come in and you buy at 200, it could go to 100. Because nobody would want to get into such kind of stocks where the numbers are not improving. Buy leaders of the company and have less than 5% exposure into such stocks. Always buy into the leaders of every sector, rather than, or at least the second rung companies in that sector, rather than getting into valuation traps. So this was a video on Shankara Buildpro. Please like and subscribe my channel, hit the bell icon so that you can get my video straight away when I post it. Thanks a lot for watching.